Alrighty, Doc here. It is TGIF. Thank goodness it's Friday. It's been a fun-filled week, a wild week. We've seen, the Republican sweep, Mr. Trump getting the majority vote and the Electoral College vote. Wow, talk about double win. And there's one thing, the number one thing in our country is representative government. So the what do you call it? The electoral vote is the most important thing. That's the one that makes you president. The popular vote, not necessarily. It will not make you president, but it'll make the loser frustrated. In other words, they didn't get the majority. It's like our country's not built on the idea that majorities control minorities. I'll say that again very clearly. There is no concept in our country to believe that the majority tells the minority what to do. No, it doesn't work that way. This is not the United States of Los Angeles or the United States of New York City. It is the United States of America, which means all 50 states. So, in other words, if you can't win the majority of the 50 states independently represented, then you don't get to be president. In this case here, he won that big time, 312 or 314, something of that nature, where you need 270. And then he actually won the majority vote itself. So, boy, the opposition is really lost. And then he won the Senate, picked up the Senate, and he has the House. So it's not a big margin, but it's a margin that gives him power. And so that's the way I look at it, is this week is over with. Hooray. It's done. We've had enough fun. Let's go back to governing again, and that's the way it'll be. All right, you can see up there is the 10-year bond showing a little strength there again today. The Fed, the bond vigilantes up in here said, geez, Jerome Powell, you don't know what you're doing. And that's what that big, long slide is all about. You do not know what you're doing. Matter of fact, he even insinuated yesterday that, hey, he could raise interest rates, no problem. That's what he's thinking. Maybe we could raise interest rates again. You hear what I'm saying? He actually suggested that maybe after dropping interest rates, like yesterday, dropping it a quarter point, and you can see that quarter point has had some effect, right? Let's see, where's that mouse at? You can see that it actually is shown in the market. He dropped it a quarter point. Hooray. When he dropped it a half a point, obviously didn't make the bond market or the traders or the investors that happy at all. Matter of fact, it was the opposite. It did the opposite because it was supposed to go the reverse of this price, not the collapse of this price. So at least it's reflected a little bit in the marketplace there. Boy, did we guess the Chinese? I mean, cut me a break. We guessed how the Chinese function. 5-year policy. Would you believe it? Wait a minute. What is this? This is not it. Now, can I hear me? Can I hear me now? Why am I not hearing me? Let's see if we can find out why I'm not hearing me. Let's try that again. There it is. Okay. It was a delay. There we go. All right. Now I'm happier. All right. I hear me now. Okay. So, I've been talking about 2 weeks now. How does a communist nation or a very extreme socialist nation financially govern? By 3-year, 5-year, or 10-year policies. Let's show you what we're talking about here this morning. Try that again. There we go. China announces about 3 hours ago a 5-year policy. China on Friday announces central government would allocate an additional 6 trillion yuan, $840 billion. They're only about 4 trillion off on the dollars. Local governments for tracking hidden debt issues programs take effect this year and will run throughout the end of 26. And Chinese Minister of Finance Lan Fo Yan told reporters that the that breaks down to around 2 trillion won a year. I was saying they need more like 2 trillion won every, like, 3 months, not over 2 years or 3 years, 4 years. Was it five? I'm sorry, there it is. Over 5 years. There it is. What did we talk about here? The local governments and special bonds over 5 years. It's a 5 year plan. Beijing, it's, let's see, there it is. The policies will reduce hidden debt 14.3 trillion won to 2 trillion won by 2028. Well, let me think. What did I say it needs? 25 to 30 trillion won. That's what I was saying. So, whoops. Doc guessed it again. I mean, well, it's not that hard, I mean, it's a communist nation. So how else are they going to govern but 3 year or 5 year or 10 year programs? I mean, one size fits all, traders. Remember that in a communist or socialist country. We'll manufacture the size 7 shoe for about 3 months, and then let's make the size 9 shoe for 3 or 4 months, and then what the hey, maybe for a month or two we'll make some 11s or 12s. Make it 12, and this way most of the people will fit into it. What if you have 13? Oh well, cut out those toes. Yes. So that is where we stand. How about that, huh? What a hoot. We've been talking about that for like over a week now. They need to cut, or they need that stimulate. They need between 25 and 30 trillion in won, not 16. Not what did it say there? 14 trillion won. By let's see, how did they say this? The policies would reduce hidden debt from 14 trillion won to 2 trillion won. So that's a 12 trillion won between now and 2028. Right there, we have it highlighted. Wow. And they're talking up here. Look at that, around $2 trillion a year. We thought that it should be like I don't know, a year. Should be more like about 6 trillion. 8 trillion, 12 trillion, 12 trillion a year, something like that, because we're looking at 25 to 30 trillion overall that needs to be done. And it said here, over that time period, they're talking $840 billion. We're talking $5 trillion they need. So this just shows you how unfortunate the leadership is in being able to stimulate. So, and not counting, like I said, I always look at them more like an angry colony. They always seem to have that angry colony thing going on, It's like, well, then you don't like what we do over here? Stop trying to sell us items. Stop trying to move companies from the United States to there. Because you know what? We don't want to buy your slave labor materials and your okay, good or bad products. We got a whole world to buy from. Wouldn't the European Union love us to buy $100 billion worth of materials from them instead? And how about India, another 100 billion, and take it away from China? How about 50 billion to Vietnam, another 50 billion to Japan? Stop being angry at us. You're not going to beat us or push us around. That's what I say, and that's what the election just told us too. The American people feel that way to the point where Mr. Trump has a full sweep. Remember, you can't steal elections. How many years now they've been telling us that? You can't. They're all fair elections. Well, get on board, people, because guess what? Here comes the Trump train. All right. That was my first sip of the tea after 10 minutes. All right, now let's go take a look at, let's see, where do we jump back to? Let's jump back to the dollar. I saw the dollar get pushed into the sell yesterday. Let's see where it's at today. Oh, dollar. Come on in, dollar, right there. There's the dollar. And there is the dollar. And it's loading. Boy, is it loading. All right, there we go. And you can see the dollar went into the sell yesterday. It's looking like it's trying to jump back into the buy, but it's got a red dot. It's up just a little bit. That's not a good sign what the Fed did. In other words, they've lowered rates now 3/4 of a point right here. That thing is supposed to be not going this direction. It's supposed to be going down lower. So obviously, Mr. Powell yesterday was like, we could raise rates next year if things don't work the way they're supposed to. This guy shoots from the hip. He gave us world inflation. It took him a year almost and a half to figure out that we had inflation. What is he doing during the day? Is he playing pool? Is he reading, I don't know, books, watching movies? What does he do during the day? I mean, somebody get him a job, he could be like Trump. Go work at McDonald's a little bit, work the window for an hour a day. Work the window at McDonald's. Do something. Make fries, cook burgers. Mr. Powell needs to get a job. He needs a second job, make ends meet, All right, from there, let's go back to, and you can see like the algorithm itself. There's the algorithm on the daily. It's gone in and out, in and out, in and out, back and forth, back and forth. They can't, they don't know how to deal with this guy. Now, you can see here on the weekly, there's the weekly. It's been in a weekly buy for like 6 weeks now, if not longer. What's it say on the spreadsheet? Let's go to the spreadsheet. There it is right there. We're looking at 5 weeks. This is going to be a 6th week. It's someone get Powell a job because he's sure to. And I listened to that whole news conference yesterday. Not one economist that they let speak to him asked any quality questions whatsoever. It's all fluff questions. It's like, imagine if I was there. I'd be like, Mr. Powell, what do you think about employment numbers? Are all employment numbers equal to the economy? I'd love to hear his answer to that. I mean, are government jobs just as important as private sector jobs? Are they equal? Are they limited? I myself, you already know my opinion. Government jobs should be almost zero on the employment number. In other words, well, if they work for the government or the medical, side of the government, then that should be zero employment. In other words, don't add it to the labor force because it's tax dollars to pay those people. It's not private sector people. In other words, it's not the private sector, paying them. It's the government. They're taxing us to pay them. Hey, Robin. So I'm just going through what Mr. Powell had said yesterday, and I don't know if you spotted it. The Chinese announced that it was a 5-year plan, and it's way underinvested, just way underinvested. They're not putting out, say 12 trillion won a year for the next 5 years, or let's say, I guess, divide 30 into 5. So what's that? 6 trillion won a year? That would be about right. They're going to do 6 to 12 trillion won over 5 years. I think they said 14 to be exact. That's not enough. That's definitely not enough. It needs to be around 30 trillion. So they obviously don't want to grow. They just want to sell us more items. That's pretty much what it comes down to at this point. All right, now, and you can see the 30-year bond. Let's go back to the bonds here. I'll show you what's going on in the bonds. And you can see here the 10-year bond. We showed that. Let's see, where are you? 10-year bond. Right there. There's the 10-year bond. Let's put it back up on the screen again. You can see it's trying to lift up. It's trying to do its thing. It's slowly getting there, but notice that the algorithm is still minus. So it's trying to lift up. That's reflecting his quarter-point cut over the last 2 days. Then we go over to, but you can see here the algorithm and the weekly is in sells. So this is the price of the bond. This is not good. That means interest rates are going up, not down. The price of the bond. Now, no doubt there's a little pop from it. But, the algorithms, both of them are saying, means nothing. Mr. Powell needs a new job. He needs to work at McDonald's, maybe Wendy's. Just for an hour a day to get a grip on reality. Work the window. Watching the money come in each day and how much money doesn't come in. Something. Get him a real job. because he obviously is not doing anything right at the Federal Reserve. People keep on, bond traders who I listen to keep on saying he's a day late and a dollar short. It's like he's constantly in the wrong direction. Now, this is the 30-year looking the same way. And weekly sells, all 6 weeks there, daily sells. So the price of the bond, which has been going down, 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 with a quarter point drop, well, they're giving it a little punch on the upside. Interest rates are dropping teeny weeny little bit. A teeny weeny little bit. Someone's got this Powell job. What a joke he is. All right, now from there. Oh, yes, check this out. I just thought I'd leave this up on there. Restructuring underway at Soros Fund Management as Hong Kong office to shut down. In other words, he's been backing the wrong horses, doing the wrong things. He's going to see less American dollars. That's what it comes down to. So he needs, I guess the only reason the office was open there is Jimmy Rogers might be, you ever see Jimmy Rogers? He's one of his main partners that made him wealthy. They were the three managers, and Jimmy Rogers is one of them. And the other guy is with Trump, totally. They all made him rich, and because he was a partner too. They were the real traders of the British pound trade that he gets all the credit for. Then also I'm going to leave it at that. All right, from there. Oh yeah, Robin, if you're seeing the screen, there it is. The Chinese. This is what they announced this morning. China announces 1.4 trillion package over 5 years to tackle local government hidden debt. 1.4. You need about another 28 trillion there, guys. You're way off the mark. All right. So from there, we shoot back to the chart, and we go and take a look at. Let's go look at the dollar. Let's see what the dollar is up to. This, not the dollar. I'm sorry, we did that. Let's go take a look at, are government jobs even real? They're not, as far as I can tell. They're not, and that's what Elon Musk and Vivek Ramaswamy are going to do. Both of those guys are going to be ripping this. There's going to be like firings of like 40 and 50,000 people in Washington at a time in different departments. They've overstepped their stay. They're not supposed to be there for life. It's representative government. It's not administrative government. All right. Government jobs are hocus pocus. Hocus pocus. Well, that didn't work. Just try that one more time. Hocus pocus. There you are. Hocus pocus. That's what it is. Government jobs are hocus pocus. Because it's all tax dollars to keep them employed. And they're not doing anything for us as far as I can tell. Matter of fact, they slow the economy down. They don't pick it up and get it rolling along like, let's see how we can get this business to build that factory in 2 years instead of 3. Instead, it's like, let's have them build it in 9 years instead. All right. Now let's jump over to the currencies. Individual pairs trades. There it is right there. There's the euro. You see the euro not going up for a 0.25%. There was the quarter drop yesterday. And look at it. It's kind of fine and rolling over. It's in the daily sell. It's pushing down. It's in the weekly sell. They must be shaking their heads at Powell. And you can see here's Cable. Cable really tried yesterday. It jumped into the buy. And right there, I mean, it tried. It started really pushing up, and we were saying that that maybe it will start to move in the other direction, but no, it's doing the same thing. It's got that upwardly slope that was here, and it's breaking down again. It's trying to turn and roll over and go down. Because obviously interest rates are more yummy in the United States, so they buy American dollars. And there's the cable. It's going to be in another week of sell. Looks like it's got a green and a red right there, as you can see. Green, little teeny green thing right there. Green. At the plot 1 is 1.29. And the red is at 1.2935 versus 2.995. So we're getting some volatility signal here. And you can see the last one was, where was the last one? Last one was right there. Oop, let's not move that around. Let's leave that alone. Right there. And then you got that pop the next day and then another wild move the following day. And that's the magic of it all at this point. The magic of it all. Bum, 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 bum. Let's see. Let me see what's going on there. Okay. So from there, we go to Swiss. Real inflation fighters. Someone's got to, you know what? They need to hire some Swiss economists, because these socialist economists we keep on hiring here in the States make no sense. Mr. Powell, who's not an economist, is even worse. See what I mean? He needs to get a job. There's the Swiss. You can see it moving up in that buy, in the weekly buy. But I really, I can't imagine it getting through these two lines right here. I just don't see that. Oh, you can't see that, what I'm looking at here. There it is right there. I can't imagine that. I just cannot see these things getting through. Just like we can see here in the euro. There's the euro. It's trying to, like I said, it's breaking down. Same, and the cable, showed its life. Tried to climb up and is failing. That's the sell there. We didn't even put the sell in there. Let's put that in there. Talk about all over the place. And there's that green and red as we talked about. Last green and red had a good pop up. If this thing is, it wasn't a sell when it gave the green and the red, which was cool, and it gave it a pop on the upside. How about that? In a weekly sell, no less, and you can see what that meant. It fell apart the next day. From there, we'll go to the yen, and the yen has got that same gig going on too, right there. You can see that pressure. What else we got going on there? Still in a weekly buy, in a daily buy. Kind of trapped up in the. I'm a little surprised that it's trapped up in the high, the low, the mid 50s. Really thought, it's going to hold up and, just play with 51, 52. But here we are. We've almost touched the 55 area. Probably the biggest disappointment out of all the world. In other words, investors and fund managers and so forth. They're probably really trying to shake off the concept that the bond vigilantes are not paying attention. That's probably a real powerful wake-up call. Just show you that again. Here's the 10-year bond and that long slope down. And you can see we're getting a green and a red there. And it broke down the next time. Remember, this is supposed to be going up like this. When the Fed's cutting interest rates, this chart is supposed to look like this. And instead, it's going totally in the wrong direction. And I keep on hearing the money managers say the same, they say the same stuff. But, yesterday, I would have loved for somebody to say, hey, you keep on following employment. Is there a difference? Witten on string theory, he had the topological mathematicians, let's say the algebra mathematicians, basically challenge him like 4 years ago. And what did he do? He went back to the drawing board and he found some algebra is good and some algebra is bad. I don't understand why Powell can't go back to the drawing board and go, some employment is good and some employment is bad. He won't even talk about it. That's the worst part. He won't even talk about it. So it's, it's like, matter of fact, that should be the title. Where's my phone at? That's what I'm going to put up there today, because that's what the title should be of this webinar. And it's a clear fact. Let's see. Yeah. Ooh, 32 minutes lost penguin space weather heart impact. Whoa, no. The sun is affecting penguins now. Bummer city. All right. Let's see. All right, now let's go to WhatsApp. And let's put the title in there because it's fresh in my noggin at the moment. Let's see. Title. Fed what I want to say is so long. How do I say it in like a 5-word thing? Fed labor, or it's a Fed employment, Fed employment, is that right? Fed employment Fed employment. There it is. Fed employment. Numbers. Fed employment numbers mean nothing. There you go. That's about as hard hitting as I can get in 5 words. Fed employment numbers mean nothing. And then they can listen to the webinar and see where my rambling takes us, where it's a fact that not one person mentioned there has been for 9 quarters, a year, 2 years and 3 months of it, we've been losing private sector jobs. And the gain in all the employment is from the federal government, be it the healthcare, COVID stuff, Medicare, or just flat out government employees at different departments, IRS, Labor Department, FDA. In other words, nothing productive whatsoever. No wonder the Democrats have lost in every direction. People are starting to realize, people know it. They go to the store, it costs too much. They go to get fuel in their machines, it costs too much. They go to buy clothes, it's too much. They don't have the money for it. They don't have money for buying a house or paying for their apartment. It's like 50% of the population is like, we're starving under this guy. Starving under Mr. Biden, Ms. Harris, and Mr. Powell. Oh, and notice Miss Yellen has been hiding. I don't even see her anymore since her husband put out that strange statement about economics and Harris being the one that understands it all. Ugh. All right, from there we jump over to, there's the yen. And like I said, we're real disappointed that it's getting that high up. There's the Turkish lira. And I think the Turkish lira is showing strength for only one reason, and I'm happy for it. But it's only one reason. That is because it's a weak euro. That's what it comes down to. A weak euro. And so it's going on a 5th day in a sell. What is this? We're going to be 7 weeks now in a sell. Cool. 7 weeks. We haven't seen 7 weeks in, I think now, 3 years and 4 months. We haven't seen 7 weeks. That's something. We're really, and I think more than anything else, it's because of the euro. The euro is just too weak. And then, you got the German government falling apart again. They just lost looks like they're going to have to call early elections again. It's like the same situation. We'll have to check out what let's take a look at the DAX. See what the DAX is up to before we leave that. DAX. There it is, DAX. Put it up over here. Moving down today. You can see 3 days in a sell. And second, it's going to go into a 3rd week of a sell if it stays like that today. So what do we got? We got 3 more hours of European trading. And if they can't start to lift this stuff, say sayonara to the that market there. Wonder what let's do this. Let's go see what FTSE's doing too. It's Friday. We're going to look around. I'm just frustrated by Mr. Powell and his incompetency. I mean, and there's few of us out there talking about it, and they bring in all the sycophants that hang out and ask him the dumbest questions like, "Will Mr. Trump fire you? Will you leave?" Things like that. It's like, who cares? Dude, get a job. Get a job. Let's see, where's the footsie? The guy that brought us inflation, because he said it was only transitory. Yeah, look at the footsie. They're smacking the doodling that too. That's getting pushed down also. A third day in a sell. And it's now going to be, this is the third week. We're going to go into a fourth week of sells there. That's why the Turkish lira is looking kind of firm there. President Trump today made the very first woman chief of staff in American history. So President Trump, who's supposedly afraid of women, or I don't know, strong women, has made a woman basically his boss, the chief of staff of his White House. So every time they say these foolish things, I mean, the left is so lost. No wonder they need cry time. I understand they're at Harvard and Princeton. They're giving the students off today so that they can try to get their heads together from the election. It's like maybe they want to go party with the ones that actually supported Trump instead. Get drunk. Get some common sense in your heads. Think of, numbers mean something. What's this? Is the post-election crypto jump a knee-jerk reaction or a sustainable momentum? Who cares? Let the markets tell us. Americans have burned through their pandemic savings. Yeah. All right. Now, from there, let's jump over to South Africa and see what they're doing down there. Right there. There's South Africa. You can see they're popping it up. That's not a good sign usually for the metals. You can see that means it's been kind of trapped in this. I guess in many ways this slope is something like that. I guess that's what it is. And then you get your cute little sell-offs, which help the metals, and then it turns again into ugly, And now look at that. We got the algorithm trying to pop up again, and we can grab this one. Because what did it do? It went into the buy there. And it went into the sell right there. And now it's trying to go back into the buy right there again. So, not good for the metals complex. Let's put it that way. And it's in a weekly buy and doesn't seem to be letting go there either. Even with it coming down to the manifold. Even the fast is wrestling with it. J.D. Clampett for vice president. All right. J.D. Clampett goes to Washington. That's what I call our vice president, who's a hillbilly, like in the Hillbilly TV show. He's a hillbilly, and he's going to go to Washington and bring some common sense. Let's see now. Where do we go from there? Let's go. I bet he knows what a possum dinner is. So let's go over to the metals complex and take a look at it all. There is copper. Look at copper. They rallied it up thinking, oh yeah, the 5-year plan will be fine. Obviously not. Look at this. Look at the width of that. The volatility, the volatility itself the last 3 days. Talk about, shows you what China, this is China's like nerve. In other words, you can see the pain and pleasure of China by looking at the copper. And you can see it's still in that weekly sell too. And then we go to silver. Silver is giving up some of yesterday's gain again. And it looks like it's going to close in a weekly sell too. And then we go to the magic metal itself, gold. And gold doing that same thing. You can see the fast is broken underneath the zero line. I'm going to go check out. Oh, you didn't see any of that, did you? Let's go do that again so you can see that. Now let's go back to copper. There is Mr. Copper and Mrs. Copper. And look at the size of those bars the last 3 days. And now it's trying to go back into the sell again. Pushing down. And we got a green and red dot too. Woof. A little vol coming back into the game. So then from there, there's the silver. Silver's pushing itself cleanly into the sell side. Look, it's through the manifold. Chances are it's done. It's done. And this baby is going to be going into the sell unless they have a miraculous rally today. And then there's gold. Gold same way. It's been in days and days of sells. And at the same time, the weekly is breaking down. You can see the fast is there. Now this is, central banks are buying gold. You know, they take tax dollars and they buy gold. So that is what they like to do, you know. So there's always that upward pressure on gold because they just like to turn paper into gold. Now let's go take a look at platinum. I'm a little disappointed in platinum. It's pushing into the sell and looks like it's not going to survive that attempt to go into the weekly buy. And now it's breaking down. The fast has broken the manifold. I don't expect to see that, but you know, this is not looking good at all. Not looking good at all. I would hope that it would stall in this area. That's what I'm hoping for. I keep on, not as much hope. I think that's the wrong word. I really thought and still think that platinum is going, now that Mr. Trump is in, it's going to be firmer than gold. I think it's going to slowly gain against the gold because, I mean, it's almost 2/3 cheaper than gold, which is ridiculous. You know, at this point, it should be at parity or something like that. It just shows you that the central banks are concerned about their long gold. So in other words, you would think that they're buying for the long term, so why would they care? And why do they keep on, selling silver down and, selling platinum down, as a hedge? I mean, it's the only way that anybody could, there's nobody out there that would be that stupid to do there's nobody out there managing money or private money or their own money that would be this stupid to trade metals the way metals trade. It has to be government and central banks that are doing it. Nobody else can do this because the amount of risk that they're taking is incredible, and only basically government bureaucrats are willing to take the risk all the time. Like Mr. Powell, no idea what the hell he's doing half the time. He's been wrong about inflation. He's been wrong about employment. And now again, he's been wrong about lowering rates when everybody else, with the smart people who have been financially successful at economics, keep on telling them, stop lowering the rates. You're just increasing inflation and potential for inflation. And maybe that's what he wants to do. He wants to mess with Mr. Trump's market and economy. That won't last long. Congress will read him the Riot Act and tell him Congress has the power to change him. And they will change him. They'll say, no, get out of here. You're fired. All right, from there, we go over to, let's see, there's the metals. Let's go back to the the chart, the beta chart platform, and let's take a look at Brent. I saw Brent down this morning, so we'll find it in a few seconds. The bees, there it is. Let's get that up on the screen. There it is right there. You see Brent pushing down also on the algorithm on the daily, but not the weekly. You see that? It's pressing down there. And then you can see on the weekly, it's still high up. You can see the green line moving up. You can see the fast moving down. It's just, trying to roll around. We'll see how that goes. More than likely, could be next week we start to see some breakdown there. From there, we shoot over to ding, 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 ding. Let's take a look at West Texas Intermediate, the December contract right there. And you see the same situation breaking down. The daily's breaking down, and the weekly is trying to pop up. So, this is the, I guess this is like the adjustment. Money is trying to adjust to Mr. Trump's massive landslide. So, in American terms, it was a massive landslide. All right. Now from there, uh, let's take a look at the home heating oil, which we know that they move together. Home heating oil, or the refined product, and the underlining, have a lot. It has a lot to do with a couple different variables, of course. The temperatures here in the east coast of the United States. That's why we call it heating oil. It heats the engines. It powers the engines of trucks and so forth for delivery of material. Like food and so forth. And there it is, right there. There's the heating oil. It's breaking down too, doing the same thing there, and at the same time having that same problem with the weekly. And then we shoot over to natty gas. Natural gas, I saw it strong this morning. Let's see where it's at the moment. I think it's up top in it. Where is it at? Nat gas. Oh, it's down below. That's what it is. There's the natural gas right there. Give it a rewind. There we go. Natty gas. Okay, so it's see the both the weekly there and the daily right there. Both of them are showing a little strength in there, but all the red dots, it's still in the sell from the 5th, and there is the 5th right there. And so went into the sell yesterday, and so but it's in a weekly buy, so you're neutral basically. A very short-term daily is telling it's weak, but the weekly is telling you that it's firm. So, they're just, holding up in there, and they'll keep on holding up in there, and we'll keep on watching them try to do what they do. All right, now let's go from there to Spain and see what they're doing with the energy company down in Spain this morning. I mean, that thing has been 6 weeks in a sell. They've been reading this really well. These guys have got it. They got their game together, no doubt about that. Now there's a little strength there this morning, but we are in the minus on the algorithm and on the weekly. So, that's probably more like a dead cat bounce. One of your Schrodinger dead cat bounces. All right, and then we'll take a look at ExxonMobil here in the States. No doubt that they were buying it because, hey, we've got Trump now in charge of everything, and the Republicans in charge of everything, so things will be good for economy. And so you can see here, algorithm yesterday, trying to press into the sell a little bit. It's trying to climb into the weekly buy. This, I expect to see this thing to stay firm, pay its dividend, make money, so forth. But it won't be making as much money as it had been doing before. So, what do we do from there? Let's jump over to, I guess that's it. That's the energy. So let's just take a look around the world. We'll take a look at the Asian markets. Let's first go to the epicenter of it all. Obi-Wan Kenobi. Right there. There's the Chinese market. You see they pressed it down last night. Or they right there. There's the push. Pushing it into a daily sell. Now let's see how the weekly looks. Now the weekly's doing the same thing. Here's your daily sell signal. Pressing down also. Yep. And then, yep, okay, that's cool. And then let's go check out. There's the weekly. You see the weekly's trying to pop up. We'll see, it's the second week in that buy. And everybody, I guess, was like cheering on, going, okay, yeah. They're going to stimulate. We talked about it here. Oh, they're going to stimulate. They're going to stimulate. They're going to stimulate. Yeah, they're only doing it like in the United States. A lot of times we call it posturing. The way you sit or you walk or you stand. It's a posture that you reflect. In other words, are you hunched over? Are you standing tall? Are you, smiling? Are you unhappy? In other words, it's posturing. And so what we're really seeing from the Chinese, the People's Bank of China and the Communist Party economic plan is posturing. We're not really seeing, we like to call it where the rubber meets the road, a tire on a vehicle. And we're not really seeing anything more but posturing. So, all right, now from there, we go over to Tokyo. Let's see what Tokyo is doing. Right there. And you know what I should have done? I should have jumped to Hong Kong. You see a couple days of pressure, but nothing major because you can see there's buying going on here on the weekly. You see the daily is the same situation. It's 3 days in a buy. And so even with the red dots, it's telling us that there's just strength at the moment on the upside. And I'd imagine because of the way the currency's going, we're up in the 154, 55 area, basically that's inflation. So they need to buy something to hedge that inflation, and the stocks are about the best thing to do. Now let's go take a look at the Hang Seng. See how they're treating it in Hong Kong. I thought it was kind of odd when we weren't seeing that strength, in the Singapore Straits Times yet. And see how it's like choppy. They pushed it in the buy like everybody else. But notice right here, the weekly could not get going. And I thought, that seems odd to me. I trust Singapore and Hong Kong to be able to front run the People's Bank of China or the Communist Party, because I'm sure they're in communications. It's location. They're around them. They do commerce in that area, so they have a good feel for what's going on. Now, so there's the Hang Seng trying to blow into the sell with the weekly. Now let's take a look at the Singapore Straits Times, the STI. Same thing. I kept on saying they will reflect, a real stimulation that would power the world. In other words, power China. Put some energy into it. And that's how I feel about that. And we talked about that. And you can see there's the Singapore Straits Times. And that is showing strength. So they must be happy about the stimulus package. Maybe it closed there before. I mean, they announced it after the Asian markets were closed. So I kind of, I'm always insinuating that I think that Singapore has a better feel before the announcements. So that's showing strength. Hong Kong is not. And we also noticed that the Seoul index, South Korea's stock index in Seoul, the Kospi, wasn't reflecting strength either. Let's take a look at that too. Right there. And you see, it's just been mildly selling, and it's in weekly sells 6 weeks. They're not really reflecting a lot of stimulus from China. I don't know if I could say that it's a flight to safety to Singapore. In other words, the Singapore exchange went up more because they're just moving capital out of China, out of Hong Kong. You always see those numbers every year, how money is leaving China. Every so often we show those statistics here on the webinar where money is just flat out trying to find a better place to be. Let's go take a look at Taiwan. The chip kingdom. Today they moved an NVDA into the Dow Jones Industrial Average, and Sherwin Paints, big chemical company that makes paints and other items like that. They're in the Dow. They pulled out Dow Chemical and Intel. And then there's still talk of Qualcomm buying Intel now. So it'll just disappear altogether. Let's see, from where am I headed? I'm heading for Taiwan. Let's go to Taiwan. Right there. Yeah, see, Taiwan, very firm, because, chips are the thing. In the short term, it's been bullish, protecting you from that weekly sell of the second week now. It turned around and said, hey, get long, or at least get flat. So the shorter term, or daily, is reflecting, to protect the short. In other words, don't be short, on a very day-to-day basis. Now, the weekly is saying, no problems there. We're taking some profits. And that's what they're doing. They're taking some profits from a great move. It went from 21,000 up to, today is at 23,500. So you're talking about 2,500 points in a matter of, what is it? That's September 11th, and that is September 11th, and that's November, basically 11th. So you're talking 2 months, it went up 2,500 points. So it's saying, hey, We think we should be taking profits. They're saying it from there. The 23,500 of October 21st that went into the weekly sell, and right up in there, and it's been in that weekly sell. But the dailies recognize that there's some money still pouring in. It's a chip business, and if Intel's going to disappear, it's only going to give better position for other chip companies and manufacturers. All right, and then from there, we dance our way over to. Let's just jump to the Nifty 50. Let's see what the Nifty 50 is up. There it is, right there. We gotta put that name in there so we can see it much better. Here it comes. Like I said, wouldn't India be happy with another $100 billion or $150 billion worth of business? Take it from China and give it to them? Yeah. I don't know why China thinks that they have the ability to be a consistent provider of products to us when we like free markets and free people. You can see here the daily in a sell from yesterday, and the pressure's there today, and they're in that weekly sell. That, I would just say, is the burden of being a major brick. I think that's what that ever since the conference was announced and they were going to have it back here in September, and then they had it last week and a half ago, or last week, I guess basically you can say. That is the burden of being a brick. Now, we really think that India is a top tier brick, so it's going to have a lot of burden on its shoulders to help the rest of the bricks out and all the little bricks. So from there, we'll jump over to. Let's go to. It was yesterday we saw it. Aramco in Saudi Arabia rocking and a rolling because of Mr. Trump's victory. Let's see how it looks today. Boom, 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 boom. Where are you? Aramco, right there. There it is. Look at that. Looking good yesterday. There it is. So that the week is closed already. There's the strength from it, and they're pretty happy. That means, like I say, when we talk about geopolitics, we're always talking about Mr. Trump's attitude about it all, and that is make love, not war. And so, I understand that the U.S. State Department said, we're not paying attention to Mr. Trump until he's sworn in. So we got to put up with a couple more months of, indecision and, basically bombing and so forth because Mr. Biden's policies are goofy. There we are. Now from there, we'll jump over to, let's see, since that's closed already. Oh, let's take a look at Rocket's Red Glare. Let's see what how Tokyo went out. Not Tokyo, I'm sorry. Was it, there it is right there. The Tel Aviv Stock Exchange. It's holding up pretty well. There it is yesterday doing that. Now, notice the algorithm is still in the minus for these last couple of days, but the prices have been rising, and it's in a weekly buy. So they're not really worried that much about the rockets at this point. They seem to be able to stop 80 or 90 or 95% of them. And sooner or later now, with Trump in office, they'll stop all of them. They'll stop doing all this crazy killing thing. And right now, Israel's playing the great defender. It does a great job defending its population. They don't use them as human shields like the opposition in Gaza and Palestine. They like to use human beings as human shields. Let's go take a look at. We saw what the DAX is doing. The DAX is down. We saw what the FTSE is doing. Let's go to Italy and take a look at the Milan exchange and see what they're up to. Right there. You can see it moving down a little bit more today. It's in the daily sells, and it climbed into the weekly sell. A little pressure on the continent, no doubt about that. So the DAX is that way. The FTSE is that way. Milan is like that. Let's see what Paris is up to this morning. Right there. There's the CAC 40. Same thing. They're pushing it down today. The algorithm's down in the weekly sell for a fifth week starting now. This is the fourth week. completing. Then let's take a look at Brussels, where all the money is. Just like John Dillinger, the bank robber of the 1930s. Why did they? Reporter asked him one time, "Why do you rob banks?" He said, "That's where the money is." Good reason. All right, let's see if we can find the there it is right there. That is Brussels. You see, it's flat to up, red dots, in a sell for 3 days, but doesn't care, and it's in a weekly sell for 3 full weeks now. It seems to be. This is money heaven right there. The European Union floats all kinds of financial ideas with money, and population has no control on who's controlling the damn thing. Even when they change the parliament, there's a subcommittee that chooses who the parliament leader is. So it makes it even more a worse thing. All right, what else we got? That's about it, traders. Everybody. Let's see. In the States, we're kind of like mixed. Let me just put that up on the screen. Where's that at? Right there. Here's the S&P 500. It is breaking down. It's trying. You can see our algorithm is rolling over. That's the 3-hour one. Let's go take a look at it, on a daily basis right there. I mean, it's pretty much, they sold it down in the beginning of the European hours. You can see that. This is an intraday. You see that pressure on it. There's the European Open up in here. Sold it down, and then they started buying it again. I don't know who, but in the hedge. I always like to call this the hedge fund hours right here. And then we'll see if they knock it down again. I kind of think they might. It has that look like it wants to. Let's put it that way. All right, traders. We will catch you on Monday. TGIM. Thank goodness it'll be Monday. So, happy trails to you. Until we meet again, which will be Monday. Happy trails to you. To all our Dukascopy trading friends, right there, Dukascopy. So, this is Doc from North America, from Chicago Quant, saying, have a safe and smart weekend. Ta-ta for now.